Stop what you are doing right now. Because what just happened in Ottawa could change everything about your retirement, your healthcare, your medication costs, your pension, and your ability to stay in your own home. The Canadian Senate has just passed one of the most significant elder care bills in this country's history, and most Canadians, including the people who need it most, have absolutely no idea what is actually hiding inside this legislation. Some of it will protect you. Some of it comes with traps and deadlines that could quietly cost you thousands of dollars if you do nothing. And the clock is already ticking. Stay with us until the very end of this video, because the part that nobody is talking about may be the most important thing you hear all year. Let's start with the reality that most politicians refuse to say out loud. Canada is aging faster than our systems were ever built to handle. Right now, over 6 million Canadians are aged 65 and older. By 2030, that number will climb past 9 million. And here is the part that should alarm every single person watching this video: our healthcare system, our long-term care homes, our pension structures, and our home care programs were all designed for a Canada that no longer exists. The Elder Care Bill that just cleared the Senate is Ottawa's biggest attempt in over a decade to catch up to that reality. But catching up comes with fine print. And that fine print is exactly what we are going to break down for you today, in plain English, right now. Think about Margaret. She is 71 years old, a retired schoolteacher from Hamilton, Ontario. She spent 34 years educating Canadian children. She worked hard, she paid into the Canada Pension Plan her entire career, and she planned carefully for retirement. But today, Margaret is spending nearly $400 a month on prescription medications that are only partially covered by her provincial plan. Her grocery bill has gone up 38% in 3 years. Her property taxes rose again this past spring. And last year, her daughter had to reduce her work hours to help care for Margaret, losing nearly $22,000 in annual income in the process. Margaret is not unusual. Margaret is Canada. And this bill was supposed to be written for her. The question is whether it actually delivers, or whether it quietly leaves her behind once again. Here is what the bill actually does, and why it matters right now. The new Elder Care and Dignity Act addresses 6 major areas of senior life in Canada. Healthcare access, prescription drug coverage, home care and caregiver support, long-term care reform, retirement income protections, and fraud prevention. We are going to walk through every single one of these, and we are going to tell you exactly where the benefits are, where the risks are hiding, and what you must do before the deadlines kick in. Let us start with healthcare, because this is where the bill makes its boldest promises. The legislation commits to expanding access to primary care for seniors in underserved communities, particularly rural and northern regions where a shocking 1 in 4 seniors currently has no regular family doctor. The bill creates new federal funding transfers to provinces specifically earmarked for senior health teams, meaning more nurse practitioners, more geriatric specialists, and more mobile care units reaching Canadians who have been waiting years for basic medical attention. But here is the part nobody is talking about. These are funding transfers. That means the money flows to provinces, and provinces decide how to spend it. There is no federal mandate guaranteeing that your province spends this money the way Ottawa intends. Which means depending on where you live, whether that is British Columbia, New Brunswick, or Saskatchewan, what you actually receive in healthcare improvements could look very different. Stay with us. Because this pattern repeats in almost every section of this bill, and knowing it could save you from a very unpleasant surprise. Now let us talk about medications, because this is where so many Canadian seniors are silently bleeding money every single month. The bill includes a significant expansion of the National Pharmacare Framework, specifically targeting seniors on fixed incomes. Under the new provisions, Canadians aged 65 and older who receive the Guaranteed Income Supplement, the GIS, will be eligible for enhanced drug coverage that caps out-of-pocket prescription costs. The target threshold being discussed would limit annual drug costs for eligible seniors to no more than $250 per year. If you are currently spending $300, $400, or even $600 a month on medications the way hundreds of thousands of Canadian seniors are, that is potentially thousands of dollars back in your pocket annually. But, and this is critical, you must apply. This is not automatic. The coverage does not simply attach to your file because you are a senior. You need to confirm your eligibility through your provincial health authority or through Service Canada, and there are enrollment windows. If you miss those windows, you wait. And for too many seniors, waiting means choosing between medication and food. Think about Robert. He is 68, a Navy veteran from Dartmouth, Nova Scotia. He takes 7 prescription medications. 2 of them are for heart conditions. 1 is for diabetes. His total monthly medication bill sits at $510 after provincial coverage. He served this country for 22 years. He should not be rationing pills to make his pension last until the end of the month. Under this new bill, Robert may be able to dramatically reduce that number. But only if he knows to apply. Only if he knows the deadline. Only if someone tells him. That is why this video exists. That is why you need to share it with every senior you know. Now let us talk about something that affects not just seniors, but their entire families. Home care and caregiver support. Right now, there are an estimated 7.8 million unpaid caregivers in Canada. Most of them are adult children, often daughters, who quietly sacrifice their careers, their savings, and their own health to look after aging parents. The economic cost of this invisible labor has been estimated at over $25 billion a year. The Elder Care Act addresses this in several ways. First, it expands the federal caregiver tax credit, increasing the claimable amount and broadening eligibility to include a wider range of caregiving relationships. Second, it introduces a new caregiver benefit top-up through employment insurance, allowing working Canadians who reduce their hours to care for an aging parent or spouse to claim partial income replacement for a longer period than currently permitted. Third, the bill commits to a national home care strategy that would fund an additional 200,000 hours of publicly subsidized home care annually. This is real money and real relief for families who have been stretched dangerously thin. But this is where things become dangerous for seniors and their families who do not pay attention. The caregiver tax credit changes come with revised definitions and revised documentation requirements. If you are currently claiming the caregiver credit under the old rules and you do not update your filings to match the new requirements as outlined by the CRA, you could trigger an audit, face repayment demands, or lose the credit entirely. This is not hypothetical. This happened to thousands of Canadian families during the last major tax credit restructuring in 2017. Do not let it happen again. Speak to a tax professional or contact the CRA directly before you file. Long-term care reform. If there was one part of this bill that arrived with the most national urgency, it is this one. The COVID-19 pandemic exposed what elder care advocates had been warning for years. Canada's long-term care system was broken, underfunded, and in some cases, deadly. More than 17,000 long-term care residents died during the pandemic. Entire floors were abandoned. Staff ratios were catastrophically low. The horror stories that emerged from facilities in Ontario and Quebec shocked the country and the world. The Elder Care Act introduces, for the first time, a federal baseline standard for long-term care homes that receive public funding. This includes minimum staffing ratios, mandatory inspection reporting, and a new complaints registry that is publicly accessible. Facilities that fail to meet these standards will face financial penalties and, in serious cases, loss of federal funding. For families with loved ones currently in long-term care, this is enormous. It means that for the first time, there is a federal floor below which care cannot legally fall. But the implementation timeline is staggered over 4 years. Which means if your loved one is in a struggling facility today, the protections that will eventually apply may not arrive in time to protect them. Do not wait for the law to catch up. Advocate. Document. Report. Now let us talk about your pension and retirement income, because this is the section most retirees are most anxious about, and where the stakes are highest. The bill does not make direct changes to CPP contribution rates or OAS payment amounts. Let that reassure you slightly. Your Canada Pension Plan benefits are not being cut. Your old age security payments are not being restructured. What the bill does do is introduce new indexing protections for the Guaranteed Income Supplement to better reflect the actual cost of living for low-income seniors rather than using a calculation that critics have long argued underestimates true inflation for older Canadians. This means that over time the GIS should grow more accurately with rising costs for food, housing, and healthcare, the three things seniors actually spend their money on. It also includes a small one-time seniors cost of living adjustment benefit for GIS recipients who meet an income threshold, designed to offset the extraordinary inflation experienced between 2022 and 2025. If you are a low-income senior receiving the GIS, watch your mail and your My Service Canada account for information about this benefit. It is not large, but it is yours, and you have earned it. Mental health. This is perhaps the most underdiscussed crisis in Canadian senior care, and the fact that the bill includes a dedicated mental health and social isolation framework is genuinely significant. Studies show that 1 in 5 Canadian seniors experiences clinical depression or anxiety. Social isolation among seniors has been linked to a 26% increased risk of premature death, comparable to the health impact of smoking 15 cigarettes a day. The bill funds a new national senior mental health and wellness program, providing grants to community organizations that deliver in-person and virtual support groups, telephone companion programs, and crisis intervention services for seniors. If you or someone you love is struggling with loneliness, grief, depression, or anxiety, these resources will matter. Watch for announcements from your provincial health authority and local community organizations in the coming months about new programs coming to your area. Housing. One of the most pressing issues for Canadian seniors right now. The bill allocates new federal dollars to the Aging in Place initiative, which helps homeowners over 65 fund accessibility modifications, things like wheelchair ramps, grab bars, walk-in showers, stair lifts, and widened door frames, through a combination of grants and low-interest loans. There is a maximum grant of $7,500 available for eligible low to moderate income seniors, and a loan program for those above the income threshold. This could mean the difference between staying in your home safely and being forced into a care facility prematurely. But, and please listen carefully, you must apply before available funds are exhausted. These programs are not unlimited. Previous rounds of federal housing grants for seniors closed within months of opening. The moment applications are accepted in your province, you need to move. Now we must talk about something that becomes more urgent every single time Ottawa announces a new benefit for seniors. Fraud. Financial elder abuse has reached epidemic proportions in Canada. Every year, Canadian seniors lose more than $1.4 billion to fraud, scams, and financial exploitation. And nothing triggers a surge in fraud targeting seniors more reliably than a high-profile government announcement about new benefits. Right now, as this bill moves toward implementation, there are criminal organizations already preparing to exploit it. They will call you. They will email you. They will knock on your door. They will tell you that you need to provide your social insurance number, your banking information, or your CRA login credentials to access your new benefits. They will create urgency. They will tell you the deadline is today. They will sound professional, official, and completely convincing. Here is the rule. The Government of Canada does not call you and ask for your banking information to deliver a benefit. It does not email you with a link to a special portal where you must enter your SN. If you want to access any benefit from this bill, go directly to canada.ca or call Service Canada at the official government number. That is it. Anything else is a scam. Share this warning with every senior you know. This is not exaggeration. This is life-saving information. Now, most retirees will completely miss this. There are multiple deadlines and enrollment windows tied to this bill, and they vary by province. Some benefits require active application within 90 days of the program launch in your region. Some require updated tax information filed with the CRA. Some require documentation from your doctor or pharmacist. Doing nothing means getting nothing. The bill is real. The money is real. But the government will not hand-deliver it to you. You must reach out and claim what is yours. Here is what you need to do right now. First, create or log into your My Service Canada account online, or call Service Canada to confirm your current GIS, CPP, and OAS enrollment details are accurate. Second, contact your provincial health authority to ask specifically about pharmacare enrollment for seniors and whether the new drug cost cap applies to you. Third, if you are a caregiver or have a caregiver, speak to a tax professional about the updated caregiver tax credit before your next filing. Fourth, if you are considering aging-in-place modifications, begin gathering quotes and documentation now so you are ready the moment grant applications open in your province. Fifth, and please take this seriously, warn your family about the surge in senior targeted fraud that always follows major government benefit announcements. Here is the emotional truth underneath all of this. Margaret the retired teacher deserves better than rationing medication. Robert the Navy veteran deserves better than choosing between heat and healthcare. The 7.8 million unpaid caregivers in this country deserve to be seen, supported, and protected. The seniors who survived long-term care homes during the pandemic and lost their loved ones to institutional neglect deserve a system they can finally trust. This bill is not perfect. It has gaps. It has timelines that move too slowly. It has funding transfers that depend on provincial goodwill. It has benefit programs that will only reach you if you know they exist and act before the deadlines close. But it is also the most significant federal acknowledgement in a generation that Canadian seniors matter. That your healthcare matters. That your ability to age with dignity, at home, in safety, without fear of poverty or fraud or neglect, that all of this matters. Do not let this moment pass without acting. Share this video today. Send it to your parents, your siblings, your neighbors, your friends. Because the seniors who do not know about what is inside this bill are the ones most at risk of missing the benefits and walking straight into the traps. And in Canada, in 2025, no senior should fall through the cracks simply because nobody told them the truth. Stay informed. Stay protected. And know this, you worked too hard, and you sacrificed too much, to let anyone, the government, a scammer, or a missed deadline, take what belongs to you.